So today we're going to be covering everything that I know about SPY and how to trade SPY options. Over the past 2 days, we had a very good example of SPY puts and some very nice downside SPY falling from 385 down to 374, so 9 points per share to the downside that I was able to capitalize with puts. So I'm going to teach you guys how I was able to take this trade, how I identified it, and my system and set of rules to keep me in the trade to make over 500% profit in just one single trade. So if you like content like this, be sure to hit the like button and subscribe if you want to be notified of future videos. With that being said, not going to waste your time. Let's jump right into the lesson. All right, what's up everyone? Good afternoon. Welcome back to the Trade Buddy recap webinar. And today we're going to be talking 100%, pretty much 100% about SPY and SPY puts, right? We had a very nice example of a trend change yesterday. We're going to be kind of covering that once again, just to kind of just refresh everyone's minds and help it make super clear. And then of course, if you didn't get the entry yesterday, how you could use the knowledge of the downtrend and trade puts today. Obviously, in today's pre-market webinar, I was very clear in saying that, you know what? It should be all focused on playing puts today. You should not be trying to play the bottom or to try to play the bounce. If anything, just wait for the bounces to happen and then use those levels of previous support as new resistance and buy puts. So here's the watch list from today. And you can see SPY was number one on that watch list. And, you know, like I said, the downtrend has commenced as of yesterday. And right now, as long as it holds 380.61 as resistance, it should keep falling. And then some key levels below are 379.33, 387.37, and 376. So those are the key levels to lock in partials and to track the progress of the downtrend. 100% focus today was just to look at this as a downtrend, right? Because as we know, yesterday was that first big sign of a weakness that could form. So let's see if it shows up on the hourly chart here. I think it will pretty well. Yeah, so, you know, the main thing, right? Number one, whenever you're looking at SPY, you have to really focus on stuff like the hourly chart. You can't use the 5-minute chart that well to identify the big picture trend. You should be at least using the hourly chart. And when it comes to just how a trend forms, you have to understand what makes a trend and what makes a reversal. So basically, you will see reversals form whenever there is, you know, a strong move in one direction, which is a kind of, you know, just a fluid move, not that much volatility within the move. And then all of a sudden, you're going to see massive volatility, some type of failed breakout. And then from there, you see the trend change. So just right here, we have two main examples, right? Number one, you can kind of see that just this whole move is just kind of one strong downtrend, right? Like ever since the FOMC news came out on, what day is this? On the 2nd, it was pretty much just one big move downwards, right? Yes, a very strong move, but there's not that much volatility within the overall move. It was just a nice, strong push down. And then they hit this bottom here, which then turned into a ton of volatility, right? Which kind of made a failed breakdown below this 370 line. And then from there, that constituted the trend change. So once we established that the trend was now upwards, you have to just assume that it's going to be a, you know, strong upwards trend just until we see that trend change again. Now, we did have some idea that we could possibly see some resistance just in this area, just based off the basic idea of previous resistance acting as new support. But whenever you're playing like against the trend, you don't want to try to just buy into the levels right away. Meaning, like, for example, you wanted to play this like using puts, right? Because we know it still is just a very strong uptrend. You need to wait until the trend changes, because if not, you're just fighting against the trend and you're going to get steamrolled. So all during this time, it is pretty risky to be buying puts because there's no real clear sign of that trend change, right? There's no clear breakdown. There's no clear failed breakout. It's just kind of moving up along the trend. But that changed yesterday, because you can see yesterday that we had this big push upwards. It was able to get back above this 3250 level. But then all of a sudden, you can see that we had that major kind of move downwards, right? This big, big crack. That is the first sign of weakness, because now we can establish that, okay, now this looks like a failed breakout, right? It's a failed breakout above 3250. And then the trend had moved against it in a very strong way. Huge red candle, just breaking back through that level of resistance, also breaking down through VWAP. And if you look at the intraday yesterday, right, that was like the first real sign of, okay, wait, what's going on? Because the past few days before this, nice overall trend upwards. But then, once this broke down, had a very strong move down, bounced up, rejected VWAP, massive sell-off lower, and it just had one last bounce up. Now, we talked about the entry on this yesterday, again, how you would play this yesterday. So, that should be pretty clear. Just overall, right? You have to understand that whenever the trend does change, like initially you're going to have that big sell-off, but that, first sell-off is not the entire move. That's just the first crack. And typically, because we're playing on this bigger picture, you are going to likely see, once that, this huge move downwards happens, you're going to see that last bounce up that then rejects that previous resistance as resistance again. So once again, we had that strong move down, right? Where it dropped from 385 all the way down to 377. But that was just the first break. And then from there, now that we have established that this is a failed breakout, you should expect that you're going to see that last bounce that's going to reject that previous support as new resistance. And then from there, you can enter some puts swinging into the next day, right? So you can kind of see here on the 5-minute chart. That first big drop is just the very start. So if you miss this initial drop, that's okay. But you need to understand that on the bigger picture, this is setting up for a trend change. What many people do wrong is they see this bounce, like, oh my God, massive bounce. It was just, longs getting stopped out. It still is overall bullish, but it's not, right? It's just doing that last bounce to set up that next downtrend. So that's what happened yesterday. Now going in today, right? Because we knew that yesterday was the first real sign of weakness, that it was likely going to have downside today. So with that in mind, you should only be looking to play puts, right? Because you want to trade with the trend. And if you missed the entry yesterday, then the next best entry is just using previous support as new resistance, right? Like you can see this level from yesterday, very clear, 380.57. That was the previous support. It has broken down. So now we should expect, as long as that support holds as resistance, it's going to continue in that downtrend direction. So that's a very easy area to be buying puts, right? And you can see market open. It had some initial weakness. It saw some support at 378, but it's not really significant support. Who cares? We know it's in a downtrend. Like you have to understand that like you're going to see bounces in a downtrend, but it's just a bounce, right? You have to focus on that bigger picture idea. Just because like one certain level is having a hard time to break down, it doesn't mean it's going to reverse. There is no reversal until you see the actual reversal on the hourly chart. Until then, you just have to assume that it's trending downwards and it's just going to take time to break down. So from there, right, we had this nice bounce up, but that's not a bullish bounce. It is just retesting that previous support as resistance. So if you're not, long on puts already, then that was your time to get in. So, that was like the main entry today for puts. You can see very nice, clear rejection of that previous support as new resistance. Now that price is right at 380.50, right? So in this case, The best puts you could possibly buy are probably like 379, maybe 378 puts, because overall you want to buy out of the money and then sell in the money. So, 380.50 is not that far from 379. And then from there, what you want to do is just go to the hourly line chart and mark off whatever levels you see. If you look back over the past few days, there was one very obvious level right here at 377.66. Then there's one down here at 376.26. And then there's some few more down there, right? Then overall from there, as long as the trend keeps holding up and it keeps on downtrending, you should be doing your best to lock in partial profits whenever you hit those key points, right? That's where you pay yourself. Like, in between that time, you have to just focus on the main idea. As long as it keeps holding those key levels and those key breakdowns, it still is downtrending. So for example, right here, you can see that we had this big sell-off. Once it rejected 380.57, it sold off very strongly down to 377.66. So ideally, you lock in some profits there. And then after that happens, you see it kind of bounce up, but this bounce is okay, right? This is not disaster. You have to kind of stick to the plan and say, okay, it's fine. Overall, as long as it keeps holding previous support as new resistance, it should still be downtrending. Because if you try to use trailing stops on something like this, you're going to miss that real big move, right? You're not going to be able to hold all day if you just use some random trailing stop. It's very difficult to. And then from there, you can see, right, overall, just using both the 5-minute chart and the hourly chart, just watching the trend break down. So from here, as long as it keeps holding 380.57, it should break down through 378. And then once you see that next hourly chart candle sell off and close cleanly through that next level of support, now you say, all right, now we should see it, as long as it holds that previous support as resistance, it should keep downtrending. And you just do that pretty much all the way down. Now, if you're playing stuff like options that expire today, the closer that you get to the close, obviously you can't really wait for the hourly chart candles to close. So usually, once it's past noon or 1 p.m., that's when I now use 5-minute chart levels, mainly just to track the trend, right? Because it's, you're losing time. You need to close it up pretty soon. But you can see here, even on the 5-minute chart, you just use the line chart and you mark off the key level of support. After that broke down right here, as long as that previous support holds as resistance, you're just, you're waiting for your key levels to hit. You're just kind of chilling. And then as it sells off lower, you lock in more partials and just keep holding the rest as long as you can. Even during this bounce, right? You can see this bounce here that happened at 2 p.m. This is just a bounce. It's not a bottom. It's not a reversal. It's just a bounce. And what you have to tell yourself is that, it's fine. As long as it holds against and rejects 378, it still is downtrending, right? It's all about just following the trend and knowing what we established yesterday. Then from there, see it sold off even lower. Once it breaks that next level, now you can say, all right, cool. As long as it holds against 375.68 as resistance, it still is downtrending. And you can see it did exactly that. It broke down, bounced up, and rejected. And then we had that one last breakdown right there below 374.79. Now from there, obviously, it's very close to the close. Once it broke down through this last level, I just sold the rest because obviously, they expired today. I want to get out. And so number one, it really is all about knowing what the trend is, establishing the trend, finding a good entry, and then just holding it for as long as you can by using the 5-minute line chart and the hourly line chart just to kind of keep on holding it. And then just at the same time, using those levels from the hourly chart and locking in those partial profits, especially with option trading, right? Patience partials are so important because there's so much volatility within your P&L. If you try to hold the entire position for as long as you can, the further in the money you get, I mean, you're just going to very easily stop out when you see any type of bounce. And truth of the matter is, when you're holding for these longer positions, not just 10, 20 cent, scalps or whatever, you're going to have bounces. You're going to have dips, whether you're playing long or short. And if you're holding too big of a position, you're not going to be able to have the confidence to just control your emotions and hold through those. So the reason for the patience partials is to, number one, you pay yourself to ease your mind. And number two, it reduces the volatility in your P&L. So it's a very important thing to do. Yeah, number one, know what a trend change is, right? We have studied this many times and we have many lessons about it in TradeBuddy. There's many recaps in the library that you can look at if you need to. And then number two, once you establish that trend, don't fight it, right? Don't fight the trend ever. And you just have to make sure that you trust the process and say, all right, as long as we keep on seeing levels hold cleanly, it's going to keep downtrending, because that's just quite literally how it works. It's pretty much as simple as that. No indicators, no news needed, right? Just look at the chart and follow what the chart does and make your plan based off it. All right, so if you enjoyed that lesson and you stuck through the entire thing, then it probably means that you like the way that I teach and you are able to understand the concepts that I'm teaching you. If you're a new trader and you're struggling in the markets, I know that you can go out and try to learn it all by yourself. I did that same thing and it took me years to finally, grasp it all and make an actual system. But I want to shorten that learning curve for you. So I have a lot of free content down below. Number one, I have my 1-hour trading course that you can sign up for completely for free to get an actual roadmap of how to trade. And also I want to invite you to my community of traders with a 14-day free trial. You're going to get a course, a chat room, and you can talk to me directly and ask me questions. So I want to help you on your journey. I know it can be very stressful, very hard to kind of figure out all the pieces, but I've already made the puzzle and I want to give it to you solved. So if you want that content, please click the links down below. And with that being said, I'll see you in the next video lesson.